Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta Dot Exchange. The last week the market shot up and I told you there is the third, the biggest green candle of the year 2025. So naturally when this happens, the markets are likely to consolidate. So how to know whether the market is just consolidating or reversing? Because yesterday the Nifty fell more than 200 points from intraday high to intraday low. However, end of the day, there was some recovery. So first thing is that we need to keep watching the global cues. The global cues are good. Day before yesterday also US market hit a fresh all-time high. Yesterday also hit a fresh all-time high. Both S&P 500 and Nasdaq hit fresh all-time high yesterday. Asian markets were okay. So crude oil is down, the gold is down, and all these are favorable to stock market. But despite that, why the market has fallen, so that may be because of some profit booking. And the recently, say for example, from May 11, okay, from May 11 to till now, May 11, the Nifty was around 24,000. Now is 25,500, 25,600. So that's about 6-7% higher in like 1.5 month or maybe 2 months. So definitely there will be some profit booking. So that is why the market participants feel that this is definitely a profit booking, not a trend reversal. So that is why, despite Nifty making a 200-point fall, intraday fall, the VIX did not shoot up. The fact is that the VIX is at a very, very low level. It's very, very easy for the VIX to move higher because the premiums are ultra low. Things are very, very low. Okay. So yesterday also somebody asked me, sir, can you suggest some good strategy? I told him, you go and buy Nifty Bees, okay, and then you go and buy 126,000 put option for the next year December. So by executing this strategy, no matter how much market falls, the maximum loss is only 2%, not more than that. So during the next 1.5 year, you will not lose more than 2%. But however, if the market goes higher, you capture the things. So we discuss a lot of strategies like this in our workshop. So we're having a workshop in Bengaluru very soon and in Chennai the next month. So subscribe to the workshop if you are interested. So you can see the details in the description. So the option premiums are so low that 26,000 put option next year December, you just pay only 4% premium. Usually at the money, the beginning of the year itself will be about 5% premium. Now this is next year December. So that is the kind of, the volatility index is like 12, 12.5. So this is how the option premiums, even in the long term, will be trading at a very, very low prices. So all the ingredients are in place for a market to rally, but the markets will not rally in a straight line. So it will go 2 step up, 1 step down, and again 2 step up, 1 step down. So that is a real bull market. The markets are like suddenly move 3-4%, then consolidate maybe for 1 month or 1.5 month. Again, the market will move another 3-4%. So this is how the real bull market works. So by looking at all the data, so definitely this looks like a bull market only positionally. Of course, for today, for this week, I've been telling you 25,200 to 26,000. So looks like that is going to be the case. And yesterday, looking at the open interest, even the 25,600 call option had a huge open interest. But, by looking at it, don't sell naked call option. Like these people might be having some other put option, so their break even may be much higher than what you are going to sell today, right? So tentatively, like yesterday, the people who have sold, the conservative people who have sold 25,700 and 800, but aggressive people have sold 25,600. So day before yesterday, market was very, very silent. People who have done intraday in Sensex options made fantastic profit. But yesterday it was a little bit, in the morning it was higher by 50 point, then it fell about 200 point, then recovered about 60, 70 point, it was very volatile. But today is expiry day, so I do not know for market is going to be volatile or not, but the gift nifty indicating about 30, 40 point higher opening. So markets, tend to move like this, and then suddenly one day will reverse and move higher. So I'm still maintaining a bullish view. Even positionally, I'm thinking that 25,000 will be a good support. For this week, I said to 25,200. I don't think that Nifty will close below 25,200 today. So stock-wise, initial selling by this HDB Financial yesterday, so must be over. Most of the retail people, they were very happy by getting 12 to 14% profit. So that selling pressure would have, subsided. So now next few days will decide the real value of that stock. So if that stock continue to move higher, the HDFC Bank will perform. And I feel that, HDB Financial has the potential to move higher. And why? Because the people who bought in the unlisted market at a very high price, now they are buying from the secondary market to average. So there are people who bought at 1,500 also. Now if they buy at 800, so their average cost may come down. So now hoping that one day market goes higher, these people can exit. So moreover, institutional investors, QIB portion subscribed around 58 times. So that shows the demand for that stock. For one or the other reason, retail people did not subscribe. So, banking stocks will be in focus because banking stocks have underperformed. Banking stocks has the tendency to move like this. Like, yesterday at some point of time, it was down by 600 points. That moves like that. So let us see what is going to happen today. Be ready for some kind of a roller coaster ride, weekly expiry. Today, US jobs data. Usually it comes on Friday, but since tomorrow is a holiday, it will be coming to today. So ahead of that, plus long weekend in US markets, so the traders might not take, positions home for the longer weekend. So that might add some more volatility to the market today. So overall, I'm still thinking, it should close between 25,400 and 25,600. But nowadays, our markets, intraday volatility is very, very high. So let us see what is going to happen. Hope you enjoyed watching this video. Thank you for watching.